Well, hello world, I'm L.A. Little and this is the Neoclassical Technical Analysis site TAToday.com, where a community of like-minded traders gather around to share and review trading ideas and neoclassical principles. To get content, click or register over here on the site, and you can log in, see all the information available to all members on a 2-week delayed basis. When we look at what the market is doing, what we'll see is that almost every index sector, many of the stocks, are all basically doing the same things, and that is they've broken down. They're trying to move back up to do retest regenerates to break down farther. And so, when you have a breakdown, and if we look at this chart, this is a daily time frame here. If we look at the last break, for example, this is a swing point low that was broken. Once you break up underneath it, which is what you did here, right? So the break takes place first. And this is the break bar. As it breaks, you go down however far, right? And you come back up and you try to retest it. Once you retest, what should happen is that you should continue to break in the direction of the trend. So in other words, you regenerate, in this case of a downside, and you attempt to get underneath this low and continue down. Now, we've already broken a pretty good piece. And if we're looking at the daily time frame, right, this thing can easily come down, try to test in this area and hold. But that will be the test, and that test is probably going to take place this week when we look at it. Now, if we move this over and we look at the weekly time frame, you have sort of the same thing taking place here as well. So if we go back up here and we look at the last swing point low that was broken, we had one in this area right here. And so there's the break, and the attempt to test didn't get up as high as the break at this point. We also have another swing point low that's right in this range here. Let me point this one out. It's this one. We haven't quite broken it on the first attempt. That price point, if we look at it on this bar, 2767.78, and the price point here, 2768.51. So right at it, trying to break it. If we do, then the retest regen in this case would be this lower bar on the next attempt. Now we did have a bullish, and let me just clean this up. We had a bullish retest regenerate. That was this area here. And so as price came down, that failed to hold. So in other words, you have the the breakout that took place here, the retrace, retest, and then the attempt to regenerate would come after that if the retest holds. It didn't. That changes trend, right? That's an indication that trend is about to change if it hasn't already, and that what was up is probably sideways, and that is what we saw take place on the S&P 500. Now, if we move to the longest term time frame, we actually still have a bullish retest regenerate taking place. Here's that bullish retest, and as you can see, here's your breakout. Here's your retest, and then the idea is that this thing will try and regenerate to the upside. The odds of that happening, depending on what time frame you are, which direction you're going, and what kind of breakouts you had, all factor into it, but they are more than 50%, and they're in the 60+% range. And so on a long-term basis, right, this S&P still looks okay. It hasn't done anything yet to change our minds. If we were to fail on this bullish retest regenerate, then that would give us question marks with respect to whether a cyclical top may be just about to be put in on this market. If we look elsewhere, most of these other indexes are about the same. The one that's the weakest is the Russell. The Russell has just totally broken down. If you look at it on the weekly, 2 retest regenerates on the top side, both broke. Neither one held. That's telling you it's weaker than you expect. And the swing point low on the way down that was broken, or the 2 that was on the way down was broken. We didn't even test into the first one. We did get a retest on the next bar on this one, and that regenerated to the downside. So now we're down here trying to break farther down. And so if you take this on a weekly basis and you look at it, right, you potentially have a range that's this large. And so that halfway mark I always look at, the halfway mark is somewhere in this area here. and we're back underneath that area, which says that if you stay down here, you're going to try to reach the bottom side before it's over, and so that's the risk on the weakest market. If we go over on the strongest one, it's the NDX right now, still holding up. If we look at it on a weekly basis, here we haven't even broken the bullish retest regenerate. This is the only one left. Now, given that it's the only one left, the odds favor that it probably will break here before we know it, and that would be a break up underneath the swing point low. And my expectation this coming week is for that to happen. Now, as you know, on each of these shows, I do try to point out at least one or two bullish trades or bearish trades for you, so we'll move into that next. But before we go there, let me show you something else. TA Today is unusual compared to most sites. One of the things we do at TA Today is not just give you things, but try to teach you. If you become a member, these hyperlinks are here on the front chart, front of the site if you want to look at them. But if you become a member, there's a unique program called the mentoring program. It's a way for you to learn, an in-depth learning, that is. It's a one-on-one mentoring where we match you up with someone who's already been through the program. You have a series of one-on-one sessions that meets at your convenience and the mentor's convenience. You arrange times. You work one-on-one as long as it takes to teach you the principles of the neoclassical system, how it works, and how you can benefit from it. So the mentoring program is not an absolute, but we do have room at this time to actually mentor some others. And so the question is, do you want to learn, or do you want us to feed you fish? We do both, because not only do we offer you the ability to learn in depth, but we also, of course, through this monitor activity, give you trades on a regular basis, and trades that we have setups for. Here's the most recent ones on the site. But before we go any farther on that, let's pop over and look at an idea. Here's the SOXX. Now, the SOXX, I had told members in a video 2 weeks ago that the SOXX, and I'll look at the weekly chart, was set up to drop lower. And that setup was here on these swing point lows that were nested both here and on the daily chart. And the idea was that if you got the break here, more than likely you would trade to these and you'd do it fast. And that's exactly what we did. We did it all on one bar in terms of a weekly chart. With that having been said, if you go back to what we were talking about right here at the beginning with the breakdowns on the charts, you have three swing point lows now that are lying together again. If these break, then they're going to try and cascade lower on this particular time frame, and they'll also do it on what happens to be the monthly time frame. Now, because on the monthly time frame, if you break those swing point lows, you're probably going to break this one as well, and this could be a big move to the downside. And the reason for that is when you look at this chart, all right, it was straight up. You've got a little consolidation in this area. That's probably where it would trade to the first time. And so you'd essentially get a doubling of what has been the range here, right? That range would end up doubling to another range up underneath, which is somewhere in that area. But eventually, this would probably try to make it all the way back to the prior swing point high that it broke out from, and that is an extremely long way to the downside. And so this is a very important sector. What happens over the next couple weeks, couple months, is going to be an important tell for the general market, because if this does start to break down, this is a reasonable weighting in the NDX, the NASDAQ itself, the stocks that are in this group. And so this is an opportunity when you look at it for a potentially pretty good trade to the downside. And so I wouldn't be surprised if this break does take place at some point. Now, I would also not be surprised to see this bounce first. It doesn't have to break immediately. And so the question would be is, where would that bounce take you to? You would go back to these swing point lows, and you would look at that and say, okay, it could retest all the way back up into this area here, and that's where I'd be focused on with respect to a short at the top of this breakdown bar, the overlap of the one before it, which actually is that same area. That would be the ideal place to short this. Of course, if it does start to break down all of these swing point lows, you could even just hop it at that point because the odds would be good that you'd get a continuation to the downside. So there's your trade setup for the week. I'm L.A. Little, founder of the neoclassical model that you see here on the TA Today site. If you want to get more information, come over, register, join, take a look at the information. You can see the trades that have taken place, those trades that we have open, and the performance overall since the first week of June. Even though we're slightly to the downside at this point, we're definitely still beating the market, which is the general idea. All right, have yourself a great one. I'll see you next time.